AlixPartners is known mostly for its work with bankrupt or near bankrupt companies. It's called the restructuring business.
Right.
Seems to me it makes sense to begin there, particularly with all the concerns there are in the bond market. From your perspective, Simon, how close are we to the end of the credit cycle?
Well, I mean, that's the big question. Who knows? It's been the longest or equal longest, of course, period of consecutive growth in the US. I don't know. I think what's more important is what's happening in sectors and industries. The disruption cycles, I think, are even more challenging than a potential change in the economic cycle.
Now, that's a very interesting point. Is that because of the disruptive power of the new technologies that we're seeing in any number of industries, or is it more because of the proliferation of covenant-light debt that is going to give companies more flexibility during an economic downturn?
I think it's the former rather than the latter. I think the disruptive influences, not just of technology, but changing buyer behavior, different ways of thinking about things mean that the disruptive cycles are happening more regularly than the economic cycles. Now, clearly, where you have an intersection of a disruption cycle and a downward economic cycle, then it really is challenging. I think that's the thing to focus on.
What specifically, Simon, is driving the most demand for your restructuring services and capabilities today?
Well, issues happening in sectors. So take retail, take automotive, take healthcare, take power. There are forces happening, disruptive forces, that mean that our restructuring services are very much in demand. But bear in mind, restructuring is only 20% of what AlixPartners does.
Only 20%?
Right.
Even though that is, as I say, what your company's best known for.
We're most famous for that, but actually, yes, it's now less than a fifth. We really accelerated transformation in many forms, helping companies go through necessary change, typically at speed.
Let me ask you this, though, because there is so much interest in it. If crude stays at $50 a barrel here in the United States,
right,
how much distress is there going to be in oil and gas?
Well, I think there's going to be distress whatever happens. I mean, I think there's just so much disruption going on. I mean, who would have thought, for instance, the US would be independent in terms of its oil production? I mean, what's happened with fracking over the last 15 years. So I think it's a great example of how markets just change and how industries change on the back of that.
But if we think about what the oil and gas industry went through in 2014 and 2015,
right,
I'd have to presume that it's not going to be as bad as it was then. But to what degree has the industry insulated itself from the depressive power of lower prices?
Well, I think that was a salutary lesson for people. I think there's been learning taken from it. I think businesses generally are better prepared for it, but it's going to be a shock.
And how about the auto industry? One of your managing directors, Al Koch, was the chief restructuring officer at General Motors. General Motors, as we now know, is cutting an awful lot of jobs and planning to close some U.S. and Canadian plants.
Yeah,
How active are you in that business?
Well, Al's a legend in our business, obviously. He was CRO of General Motors, but had a lifetime of doing fabulous restructuring work, like many of my partners. The automotive industry is another industry, of course, going through huge disruption. It's not just about electric vehicles, but clearly that's a big part of it. You know, you think that a standard combustion engine has probably over 1,000 parts, the standard electric engine has less than 100. It's going to disrupt the entire industry.
Do you think the big three automakers that we've been familiar with for so long will look anything 10 years from now like they do today?
I don't think so. I think that will we all have cars? Not all of us, but I think there will still be a lot of cars. But the way we engage in transport, I think, will be quite different. You know, what is the future of a 3-car garage? I don't know. You
mentioned retail. Is there more carnage to come in retail, or is retail a train that's already crashed and we're now just pulling bodies from the wreckage?
I think there's lots of change going to happen in retail, and it's not just about, old economy retailers versus digital competitors. It's about how people use data, how they collect data, and how the aggregation and synthesis of data becomes a real competitive advantage.
So are you busier in retail on the restructuring front or on the other fronts that you mentioned, the remaining 80% of your business?
Well, most of the work we do in retail is helping retailers change quickly enough to respond to market trends. Now, some of those, of course, are going through formal restructuring, but the majority are being their own activists to make that change happen quickly enough.
So what are you telling retail companies to do?
Get on top of it and get on top of it quickly. There's absolutely no margin for error here, so accelerated transformation is the key.
What about China? Are your clients already coming to you for advice on how to either withdraw from China because they fear that the trade tensions that have bubbled up in the past 18 months are going to get worse? Are they asking you for help restructuring their supply chains and repositioning manufacturing capability in other countries?
So we have offices in China. We support our global clients in China. Clearly, the trade issue is a big one. I personally think that it will settle into a sensible outcome. I think the bigger issue is the theft of intellectual property by China and how companies operate in China with an eye on that. But I'm bullish about the outcome on trade.
What are your clients asking you to do vis-a-vis China?
Well, to think, for instance, if data is kept in China, how do they protect that data so that it's not disrupted by...
Can it be?
Absolutely it can be. And I think if you looked at the trade war that's going on, a lot of it is really about the theft of intellectual property.
Brexit? How big a business has that been for you?
What a shambles.
Well, a shambles, yes, that's clear. I mean, it doesn't matter which side of the argument you're on.
I was solidly a Remainer. You know, with the democratic process ran a referendum. The electorate decided to leave. We have to respect the democratic process. I think all sides now have to work on a deal that's deliverable, and I think the European Union has to help Theresa May find a deal she can get through Parliament.
How much business is it creating for you?
Well, I think uncertainty always means that firms have to do contingency planning. So our corporate clients are thinking, you know, where should they have their manufacturing facilities? How do they deal with an environment where there isn't free transport of goods or free movement of labor?
And overwhelmingly, what are they doing, and what are you advising them to do?
Well, what we're advising them to do is to make sure they're not a hostage of any particular outcome. So if there is going to be a hard Brexit, which I think is unlikely but is a possibility, that people do have enough facility outside the UK to make sure their business can continue.